Well, good morning, y'all. I didn't get to completely follow up on the third question that was in the deal yesterday. So somebody was asking me, the third question was, well, what does that mean on bonds versus like current bonds versus should we invest in bonds and things like that? So my belief right now is that what we talked about yesterday, right, was when bonds, if you can hold them to maturity, that means when the loan ends, it's a bond's just a loan, you can cash it in, get your money. So it's a 6 month bond. You get a 5% yield or cash on cash return right now on short term US treasuries, and it's a higher yield than the long term ones because that's why the yield curve's inverted. And what ends up happening is that's kind of the safe investment. So if you got some money sitting around, you're worried about markets might be overvalued, things like that, you go into bonds, you get a nice yield. So it's kind of cool. The other thing is, in the event the Fed starts easing, which is very likely, meaning they've tightened very fast, so there's cracks in the system because when you raise the yield, it affects everything else. So whether it be short-term commercial loans, whether it be corporate bonds, like, bonds are not just for sovereign states and governments, it's also bonds for corporates, right? Well, if they start easing and the rates go down, you can actually sell that bond at a profit if the yield is higher than the previous ones. That was the problem in SBV, right? So when we were talking about SBV before, they had very little cash in the bank versus deposits. That's kind of like what we were talking about with like the story with George and It's a Wonderful Life. Well, when in the RTC fallout, there wasn't a lot of cash, but they had to just go raise cash real quick because they didn't have it in the bank. Well, so if you've got these short-term treasuries, they're decent yields. It's pretty decent right now, assuming the U.S. stays stable, which is a whole different thing with what's going on in politics, which whether you're left or right, it's crazy. And I can't believe this ruling that they had in the Supreme Court. We, both Republicans, Democrats, and independents should be very concerned, especially on the week of independence, where we celebrated on July 4th, our declaration of saying a king, there's no man above law, right? And I think that that's kind of frightening to have that happen during the week that we celebrate independence and not to have more Republicans come out and be upset. Because at the end of the day, whether you're Republicans in office now or it's a Democrat, whichever side you're really on, you set precedent in the future that, criminal acts and other things that are found to be, in courts. I don't want to talk about the merits of the case or any of that kind of stuff, but it sets precedent that something much worse. So you got a leader in the future who wants to get really crazy and do terrible, terrible stuff. I mean, not that the financial stuff's not terrible and everything else. I mean, that's up to everybody else to think about, but it sets precedent and legal precedent going forward that you can have a Supreme Court use, interesting previous precedent and establish that, a sitting president can commit criminal acts. Whether you believe Trump did that or not, that's not what I'm saying. What I'm saying is that precedent's frightening. If you've got a Democrat, for example, in office and they want to go to the far extreme, or say Trump's in office later or somebody else, another Republican, 5-10 years from now, you set precedent that a president can commit criminal acts. So that should be frightening on whichever side you're on. But back to bonds. I don't want to get too much into politics. So if you got the short-term bond and it matures, you can, if interest rates are going down, which right now they had to raise rates so fast in the United States to pull back the money supply. So the central bank's got two things that they do. They've got money supply that they can pull in and pull out by lowering and raising rates, and then they've got things like buying bonds and selling bonds. The difference with when the Fed, for example, has bonds, they don't rebuy at the end, so they go to maturity, the bond disappears. So that's a whole different thing that we can get into at some point later. But if you have these short-term bonds right now and the Fed goes to easing, you can probably sell them at a profit and a difference to your yield. So it might be a good time, this isn't financial advice, to think of buying some short-term treasuries. Well, a lot of people are like, well, why would I ever buy long-term treasuries? Because, it's a lower yield. Like, maybe that doesn't make any sense. But here's the thing. If you think that treasuries, the Fed is going to lower rates, which is very possible, because everything from your home loans to your car loans to adjustable rate loans to corporate bonds, a lot of these companies have been zombie companies in the Fortune 500, largely because a lot of the public stocks, there's a lot of reasons why public stocks have done so well since 2008, despite the fact that we haven't had any GDP growth. So GDP growth is gross domestic product growth in countries. The gross GDP growth we've had in the United States since 2008 and globally is recessionary, meaning that we would be in a recession only with these numbers. Second, the corporate earnings growth, so basically values, so price to earnings of stocks, The values have gone up, but the earnings were historically crazy upside down on basically the values versus the earnings. Earnings growth hasn't happened either. So when everybody goes, well, if that's the case, then why have stocks gone to all-time highs? We printed so much currency. So the everything bubble isn't in the underlying, it's in the currency itself. So we created twice the money supply, M2 money supply that occurs in the world during COVID. They had to. So when I found out about the repo market thing, and I was worried and told my friends to be careful, that I thought liquidity is a problem, right before the liquidity crunch of the repo market in 2019, I got told some friends to get out. I don't trade stocks, so I wasn't making any money off this. I was just giving advice. I build long-term things because I just think trading stocks is like gambling. I like to long-term decisions. And I think a lot of people should. Day trading, people make some money on Forex, and day trading is usually the casino. So be really careful about trying to day trade stuff. Make long-term decisions is my suggestion. It usually works out better for you. But so back to the question is, yeah, it probably makes some sense. U.S. bonds are, I think if the Fed turns to easing, the yield on the bonds is probably going to go down. Walk with me. Let me get back out here. So the yield on these bonds is basically at a higher yield than you're probably going to normally see. So my thinking is that if the Fed has to turn back to, basically easing, again, where they lower the rates, what ends up happening is the yields will go down. So kind of like how SPV was upside down, because when the Fed raised rates, they had all these bonds on their books that were, essentially, they'd been 1 or 2% yielding because interest rates were really low then. They had to sell them, and there wasn't a buyer because the value was lower because the yield. That's why they ended up having to sell out all these bonds for nothing in the bank to a bigger group that could hold them longer to maturity. Well, you think they can. So a lot of my friends are like, well, if the big banks only have one or plus or minus percent of the cash versus deposits, what happens ever? But again, it's still an issue. However, this time, because of where we're at on yields, they can probably sell the bonds, because if rates start going down, those bonds are going to be more valuable because they have a higher yield than the others. So everybody's like, well, why would you ever buy the 10-year or the 30-year right now on the bonds, the long-term ones, if they have a lower yield than the others? Well, number one, they're pretty attractive, and if the Fed goes to easing, so we start going from 5, 6, 7, 5 down to 4 to 3 to 2 to 1, those bonds that have the higher yield on the long term are going to be worth some money. So it may not be a terrible idea to pick up some long-term bonds too. Now, because I think there is pressure on the Fed to ease for lots of reasons. Number one, they need to ease because it's cracking the system. And number two, they need to ease because it's cracking other countries. Their currency's not. So there's a lot of pressure to ease. But they have to be careful in easing, because if they ease too fast, especially after creating twice the money supply, think about it. If you have twice the money supply, it's probably why stocks have gone up. And the other thing too is, normally when they're tightening rates, they're pulling back bonds and selling them. This time they've been creating more bonds. So we're actually printing more money in this time, because during COVID, they made some law changes to where they could basically create more and more of these loans in the Treasury. So basically the Treasury creates the bond, and then the Fed creates the currency. And then the U.S. citizens, because the way it works, we're born into bond slaves. So even though I didn't create the bond or the debt in the United States, I'm born into it. I can go into great history and what that means. It's kind of frightening for kids and that are born into bonds and debt that may be really hard to ever pay off, which is frightening for the future. We're stealing from the future, and I'm not really cool with that. But, as you start thinking about it, you might want to buy some of these bonds now, because if the interest rate starts going down, but it goes back to the question of, well, if there's, they created all this currency. Well, the issue is when you've created so much and you're printing more at the same time, that's why stocks are going up. And that's why bonds are at an all-time bear market. So it's really, really weird. And it's because of the currency that's been created. Well, when they flip to easy, they've got a tightrope to walk, because now that you create twice the money supply, if you go down too fast or don't hold on the rates, which is causing pressure, it's causing pressure in people's loans, their credit card loans, all these other things. Well, what ends up happening is that you create this scenario where if they go back to easing too fast, you could have really bad inflation, and they won't be able to stop it. So inflation concerns me. That's why we're building some stability stuff to hopefully, because when you print too much currency and it gets out of control, that kills your purchasing power. So, a day's wage is worth a loaf of bread. It's where your dollar doesn't buy as much stuff in the market. And I do have concerns, like CPI, which looks at the inflation rate. I don't think it's being really reported well, but if you can understand, Americans didn't hit it that bad. The dirham in UAE is pegged to the dollar. So, we pretty much have dollars here, and a lot of other countries are. But places like the UK, they got crushed during the inflation that got hurt. Especially worse countries like Zimbabwe and Lebanon, these other countries, like they've had a lot harder time with inflation than these other countries are. So it's like when we start inflating away this currency, it's a problem. But I do think that bonds, so the safe rate when you look at investments, if I'm looking at a tech company, I'm looking at some kind of yield, if that deal doesn't pay me a higher rate than the 5% safe deal, I don't do it. And also, like, not every deal you want an equity in a company you're investing in, because they may not have an exit. So an exit means they're going to have a future sale of the company that gives you some upside, or it might go public. And public markets are kind of frightening because I think there's going to be a lot of volatility over the next couple of years. So it's going to be interesting. But when you mix all that with the wars that are happening in the world, you mix it with this cocktail of like political divides. I'm in the UAE largely because it's a very stable environment. Like, we don't have those political divides. So with what we want to do to create stability, this is a good place for it. But we've got a lot to figure out that's coming up with in the world right now. And I think the biggest key is that, we're thinking about stability. You should talk to your financial advisor. I'm not getting financial advice. You get somebody that's intelligent and actually understands how it works. Because you can start to educate yourself on, like, how do these bonds work? Well, why is this happening? You can start to understand money is usually underneath everything. Now, money's not the root of all evil. It's just a tool. Just like a gun's not the root of all evil. It's just a tool. But we need to have controls and make sure that people aren't getting hurt, and investors, because at the end of the day, you need gun rules because people don't always make decisions right? My dad had a really cool video that he was talking about recently, his concerns that we're not just implementing existing law to stop some of the gun shootings in the States. And my dad has plenty of guns. He's a gun owner. He's a very, he believes in gun rights in the States and everything else. And at the end of the day, like, whether you believe in that stuff or not, you need protections to protect investors. But more importantly, people need to get more educated. If you start to understand how bonds work, you start to understand how things like stocks work, you start to understand things like how markets work, you can understand the politics a little bit better. So that's just some thoughts to think about. But let's go back to history a little bit more. So in 1913, the central bank was created, right? And I won't go too far, but you had to have the basically 14th, 15th, and 16th Amendment, to where we had to have register our birth certificates, you had to have a census, and then after that you had to have federal income tax for this to work. Because you can't really make a currency out of nothing unless somebody's backing it. The people backing it are the bond slaves. So your kids born 10, 15 years from now will be born into that bond slavery, and we've already stolen from the future to outlive our means today. So if you go forward, like 1933, I talked about Glass-Steagall. That's where they separated retail banking and investment banking to make a better deal for protecting investors. And then 1944, you had post-war. Everybody came together. It's something called Bretton Woods, and they created the U.S. dollar back, and everything is supposed to be backed by gold. Well, if you fast forward to 1971. France was wanting redemptions because the dollar was supposed to be backed by gold on their gold. They just wanted physical gold because at that time, a dollar was redeemable. It was an IOU, but with backed by gold. Well, the issue is the United States didn't have the gold to get back because they kind of inflated it away, and that's why they had to go to this fiat system. So a fiat system is a currency backed by nothing, but it's not true. An American that goes to any country is still paying income tax. They're still having to pay that, and we're one of the few countries that has to do it. So that's another thing to think about. But let's also go back to divides. So prior to 1944, Russia was an ally of the United States, right? But they didn't want to participate in the system because they're like, hey, we saw what the bankers did to you guys. Do we really want to be locked into that? So the U.S. has weaponized the SWIFT system to where, SWIFT is basically the system that controls dollars around the world, and the dollar backs, basically most global trade. The petrodollar, part of the stuff with Saudi back in the day with Kissinger, that was set up, like, that's part of it. But most of the global trade, 60% plus, happens in the dollar backing it, and then the euro dollar. So there's an entire system where dollars are created, but they don't get to print them like the States, that's used for backing trade. So there's a lot of mechanics. So when people tell me that dollar is going to go away and it's going to be a long time before that gets replaced. But the issue you have, the dollar is kind of like the cleanest shirt of a bunch of dirty ones, because every country's currency was inflated away at the same time after '08. And we didn't get we should have gotten fiscally responsible, taking our medicine, just dealt with it instead of just, everybody said that '08 they saved the day by, creating all this ZIRP, which is zero interest rate policy, QE 1, 2, and 3, where they blew up the central bank's debt. It was an experiment. It's crazy. Now we've had this up market, and part of the reason why the markets keep going up is that every time it goes down, algorithmic trading became big. Index funds where people would buy, or ETFs where they would buy the whole markets as a whole and don't need an active manager. When the market's going all up, that works. But we haven't really had a situation where markets are going all down. And I think it could go fast if things get ugly. Well, when you add in stock buybacks, so 50% corporate debt in the United States, in the big public companies, was going to stock buybacks. So they're using their debt not to create innovation, not to create new stuff, not to hire new people, but to buy back their stocks. So they're propping it up. And then if you look at central bank monetary policy, it affects the markets, right? So it's like we've had this kind of fake system where since really '08, it's like monetary policy makes a bigger difference than the earnings of companies. So you have a lot of zombie companies because money was cheap and you had zero interest rates forever, that the only way they cash flow in commercial real estate deals and all sorts of deals around the world, they worked at like very low interest rates. So now interest rates are high. Those same deals don't cash flow and don't make sense. So it's putting a lot of pressure on the system, but people got lazy. And so one of my friends said, well, what if we went to a gold-backed system? We're working on some really interesting things with real estate, commodities, and physical things to back a currency. But we're also working on some things to just have funds that people can go into to get access to, like really awesome developments or really awesome tech that they would never get access to, but really safe because we don't have debt. Whether you think Sharia law with not having any debt, or like the Shemitah and the Torah saying we should release the debts every 7 years, debt-based monetary policy just doesn't work. Well, as we start thinking about that, we can then go into, okay, well, how do we create stability? Well, it's going to be really hard for the world and the systems to go to a gold-backed currency, because if you did that and you didn't have this fixed inflation every year, 3+, where your money's getting depreciated and your purchasing power is going down, we wouldn't build all these crazy things where we would have been stealing from the future, pay for tomorrow, because what would happen? Deals would have to cash flow, meaning companies would have to make cash flow, not just value growth. And you've also got like the CEOs of like the major companies in the United States, they don't get paid on revenue and cash flow. They get best on stock prices. So when they're getting paid on stock prices, they buy back more stock, they pump their stock up, but we get further and further from the historical value of what the earnings should be versus that. And we've got this just insane system called the everything bubble because people just take advantage of the system. You can't get mad at them. That's how they get paid. That's what the rules are. But the rules just don't make sense. And we're going to start to see a lot of corrections from it. And this time, what I'm concerned most about is that, how do you stop inflation when you go back to easing this time? It's going to be harder and harder every time because this has happened before. Nazi Germany happened because Hitler rose, a strong man, because their currency got inflated. We could go back to ancient China. We could go back to bread and circuses of them deflating, the currency in the States. So there's lots of stuff to think about. But going forward, it would be really hard to do a gold-backed currency today because you'd have to actually create cash flow. So what does that mean? Meaning we should start creating companies that make cash flow. We shouldn't have to have it that, like right now, the US is over 100% debt to GDP. So that means every dollar added now is a net loss. So when we have a net loss on everything like that, we're just getting to the end of this way this thing works. So I know this is a lot of points that I'm making and just kind of throwing out random thoughts, but what are we doing about it? I believe that JFK said, ask not what your country can do for you, ask what you can do for your country. I'm a big believer in that. So we're trying to create stability. We will have some stable currency. We will have some stable assets to go into, and you'll access deal flow, like on tax, sweet deals you'll never see with what we're doing. But that's only a solution that some of the few people that choose to get out of this insanity go to. We'll deal with a lot of institutions, we'll deal with a lot of high net worth, and even the common man. We'll democratize investments they've never seen. But a system as a whole, we'll go way upside down because at the end of the day, nothing cash flows. So what do countries need to do? Something called base economic theory with Robert Murray Hague was created in the 1930s post this, and it said, we've got to manufacture, we've got to have tourism, things where we produce something where money comes in from outside. So we've got to get back to thinking about manufacturing. We've got to think about innovation. Like, how much has your iPhone changed since Steve Jobs? Instead of money going to inflating the stock values, we need companies that are out there trying to make cash flow, trying to create amazing, new, cool stuff. That's the groups we're working with. Companies that can change the world in terms of innovation and new ideas that are really solid and brilliant. And cash flow, that's the future. We got to get back to that, back to the innovation. I think that there's a chance when all these things crash to have an innovation boom, to have getting back to cash flow, getting back to the basics. And you know what? When we're more fiscally responsible, which is we've lost, the Republican Party of Reagan and the Republican Party of fiscal responsibility to protect it is not there anymore. There's no fiscal responsibility on the left, there's no fiscal responsibility on the right, and everybody's asleep at the wheel. One side basically creates wars and wants to sell ammunition and pushes that to raise the inflation, and the other does it in welfare state. Neither are good. We should be neither a tyrant nor a victim. We should be consciously aware. We should care about our neighbor. But I believe when you get more fiscally responsible, you're caring about your future generations. When we stop having the out of insane printing of currency and these swings where inflation gets worse and worse, and it's going to happen. When they flip eventually to easing, inflation could be out of control. So if you ever need help, we'll be there. If you want something safe to go into, and we got a great team, and we'll help. But unless we get all the countries behind us and supporting us, we need help. The more we're dealing with countries, we're dealing with leadership of African nations, we're dealing with leadership of Middle Eastern nations because they get it. We hope to be the voice of wisdom. Why? Because we've been studying this, for being quiet and silent and studying. And it's not that we know it all. We just are a bunch of geeks and we study it and we want to work hard and help people because we care about people. Because at the end of the day, when you get more fiscal response, when you get back to the good old basics of working hard and innovating and making cash flow, you stop having these fake systems. You stop stealing for tomorrow and your kids. That we should be worried about them. They shouldn't be born into something where we left them over indebted. It's not right. And more importantly, it just doesn't work. We got to get back to the basics. We got to get rid of debt. We got to, get back to doing the hard work to create companies and countries of cash flow. We need technologies that do great stuff. And that's so much fun to have a team that's working on that stuff. So it's a long message and a lot of thoughts, but, I guess the takeaways are get educated. Don't take what I teach you. Go study it more. If you ever have some questions or basic stuff, I'm here to try to make it simple. Not all this stuff's simple, but listen to it a few times. Go check with your friends. Ask me questions. We're here to talk. But the more we become more educated, the more that our investors, a lot of investment groups, they want to make sure nobody's invested in educated, so they don't, you need me to tell you what to do. No, we want you to be educated because you value what we're doing. And we want you to be educated for your kids. And globally, when we start having these fiscal divides and we change the mindset from zero-sum games where you have to lose and me to win and vice versa, and we get to cooperative game theory and working together, there's nothing we can't do. Then guess what? If we get fiscally responsible, if we start working and rolling up our sleeves and figuring out how to cash flow companies, get rid of this debt. I think of it like a family that doesn't want to go work hard and they go get a bunch of credit card debt. It's no different. I mean, I can have that macroeconomics say, well, modern monetary policy theory, doesn't matter. The inflation of currency doesn't matter. Well, it does, and it will eventually be an issue. I don't know when it is. I don't know if it's tomorrow or the other, but we've got a lot of signs that anything can spark a correction. But more importantly, forgetting in stock market corrections, not, the poor don't always participate in that, but in currency they do. And I just don't think it's cool that their purchasing power is getting inflated so a bunch of rich bankers and a bunch of elites around the world can make a bunch of money and they get hurt. But here's the thing. We're in a weird moment. The elites and the rich around the world know that if people live in a welfare state and they're not motivated to earn more money, their system's going to blow up. So we're in a weird place where the elites need to come to us too, because we make them higher returns than everybody else and we give them stable returns when the world is going upside down. And it also helps the poor too. And it's a weird moment where it's by serving the rich and get them higher rate of returns, not Robin Hood stealing from the rich to save the poor. It's basically educating the poor, getting them more educated, teaching them to fish, not just giving them a fish. And they get motivated because they got stable currency. Your assets actually hold up and they don't disappear if the system blows up. Kind of the rich and the poor in this together. We're all in it together. And then the politicians and the brokers in between that don't like stuff that I'm talking about because they lose their power systems, they're going to have to work with this because at the end of the day, they won't get reelected. So it's a really weird moment in history that we've been working on for a decade to prepare the way to, I like the books of Isaiah. Let's set the oppressed free. Let's do like what JFK said. Let's go into all nations. Let's preach the gospel. Let's show that we can love each other. Let's be humble enough to for me, if the janitor in the room's got a better idea than I do, we work together. A leader that has much yes men around him can't run as fast as we can because ego's just dumb. The universe expands. If you think you know it all and you don't keep learning, you don't keep putting smart people, you don't have people questioning you, you're going to get your butt kicked by a group that just has a bunch of smart people that are humble and work together. So hopefully this educates some people a little bit. If you got any questions, shoot me a message. But I hope everybody's well. God bless you. And don't be scared, man. Everything works out. Just breathe. And have your faith in a higher power. Do your best every day and give away the rest to God. Talk soon.